It's a trade management technique. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alrighty then. Let's actually have a look at this. I want to teach you guys a trade management technique that you can apply to your trading. Now, as you guys know, right, it's about a probability. Every single trade that you take has a random outcome with a probability of an outcome. So today's trade may be not successful. Tomorrow's trade might not be successful. The next trade might be successful. So please keep this in mind. Every trade you take has a random outcome with a probability of an outcome. And that probability is only shown over 20 or 30 or 40 trades. Right, so just remember that as you're applying this technique. Now, let's move on here. Let's actually apply this technique here. Let's say, for example, the market ran up, and if you haven't seen my other videos in the past, guys, or make sure you go through all my trading techniques. I'm doing a lot of videos on helping you trade better this week as well too. So make sure you go through all my other trading technique videos to build the bigger picture. If the market runs down through here, and say the market runs down through here, I'm going to be teaching you a simple trade management technique. And as the market runs up through here, just say, for example, you listen to my other videos and you say, you know what, this looks like a good trade here. The market's had a big run up, it's had a nice pullback, it looks like it's getting ready for another good run. All right, so you go, okay, cool, I'm going to get into here. This is what's kept me in the game for so long. What I like to do is, as the market starts to turn up, I like to go long here. Now, I don't just use that. I use volume analysis. I use my stochastics as well. I like to use support resistance. I like to use all these other things to form a system, right? So I don't take a trade based on, oh, the market's gone up with a pullback, let me get in. No, all right? So, and as I said before, I don't know which trade's going to work out, which trade is not going, oh, excuse me, which trade is going to work out and which trade won't work out. So what I like to do is this. I say, okay, cool. I like to have my stop below the low here. All right, so let's actually do this on orange. So I like to have my stop just below the low here, and let's just say, for example, we're using a stock, and let's just say this was a $2. All right, this was $2 here. $2. So therefore, the market goes down below this low here. I know that it wasn't a good entry, and I have a $2 risk. Right, $2 risk. Well, every single time that I do that, I say, okay, automatically my minimum target is up here at, say, $4, possibly even say $4 to $5, as in like stock move, right? So I always try to have a 2, sometimes, so that'll be even 6, right? 4 to 6 profit target, a 2 to even 3. And the reason why I use sometimes 2 to 3 is because sometimes I can really see it's a really good setup. And sometimes I stretch it even more, like with silver. So I can really see it's a really good setup and things are moving. So a 2 to 3, a minimum 2. A 2 profit, so 2 profit, and then to actually 1 risk. So if I'm risking $2 on a stock, as an example, on the stock move, then what I like to do is I say, okay, I have a target of around $4 to $6. That'll be my first target. Now, if you're just buying shares, that'll be the way that I trade, right? And if you look at this, if you took 100 trades just like that, 100 trades where you're risking, and let's just say, for example, you're risking $1,000, right? You're risking $1,000 every time you took a trade, but you're profiting a minimum of $2,000 every time you trade, right? Let's just say this is average, right? I know sometimes it's going to be smaller, sometimes bigger, but let's just say it's average. Well, just do the numbers, right? It's just a numbers game. If you took 100 trades and you only got a 50-50 right, and you applied that rule, $1,000 loss and $2,000 profit on average. Sometimes it's $2,500 profit, sometimes it's $1,800 profit. You get what I'm trying to say here, right? Not every trade is going to be a successful trade, but set the game up to win. So you have have 100 trades here, 50 of them are losers at $1,000. What is that? That's $50,000. Oh, but look at this. You have 50 of them are winners. 50 of them winners times 2,000 is what? 100 grand. minus the 50 grand loss. Oh, you made 50 grand worth of profit. Take away some brokerage, you might have made $40,000 in profit. Do you see what I'm saying? And now when you take that up to 60%, 70%, and now you're getting better at reading the charts and you start to increase this here. Now can you see what I'm saying here, right? You start to increase sometimes 3, sometimes 4 times profit target. Instead of going 50-50, now you're at 70% because you know how to pick really, really good setups, and you get better and better and better. This is the progression as a successful trader, right? Especially when you're trading directional. So anyway, guys, this is a trading technique, a trade management technique built in with some understanding of how the markets work to give you a bit of understanding as you're trading. Please focus on this to really, really help you out. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course, and I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.